Look ahead. Joining me right now are Value Advisory founder Howard Rosencrans and Emerald Asset Management founder, Chairman and CEO Joe Besecker. Gentlemen, good to see you.
Morning,
Thanks so much for joining us. Howard, how do you characterize the third quarter?
Challenging, to say the least.
Yeah.
If you're sitting at home and you're watching, or you're just getting a sense of the market and you're looking at the Dow Jones per se, you're seeing something that's down in September just a few percent. But the reality is, if you're looking at individual stocks, you're seeing, if you look at the Russell 2000 growth per se, they're down 8%. It's down 17% since June. So I don't think people recognize the amount of decimation that stocks have really had. First, it started in China. It hit the commodities. It hit the emerging markets. Well, now it's bleeding into consumer confidence.
Yeah.
And you're going to start to see downward movements in earnings estimates, not just for commodity-sensitive companies, but much more broadly. The whole environment where you just thought you could sit back, take it easy, relax, stocks are going to come back. Flash crash, they come back. Greek crisis, they come back. Fiscal crisis, they come back huge. That's not the progression here. The quiet volatility is behind us.
All right, so I want to ask you about what you're expecting for the next quarter and several quarters ahead. But here's a number for you. Okay, Joe, $11 trillion in market value destruction in the third quarter on global markets. $11 trillion. Does that reverse, or do we have more losses to come?
Well, when they use the word destruction, it's kind of like that term money heaven. If you break a Ming vase, it's worth $1 million and it shatters. Where does that money go? Money heaven. It's only destruction if there's a sale or transaction. So my feeling is that we've had this monstrous run, all right? You know, if you go back to 08, 09. And now we have a really serious and needed kind of correction. And if we're going to leg up for another 3, 4, 5 year run, you're going to have some pain along the way. It's never fun to take this pain, but there are sectors. Howard talked about the Russell, and you know at Emerald we manage mostly money in the Russell 2000.
Small and mid cap.
Yeah, that's correct, right? And it's been painful. But the sectors kind of have moved in different. So an area that we really are getting tattooed lately is in the biotech. We have a great expertise in that.
Got killed.
We've done really. It got killed, but still some of these are up 20-30% for the year. You know, so you have these big moves that were probably overinflated, and then you have some debt. And one of the things in the money market, in the money management business, there's a lot of people investing in sectors that they don't really understand.
So where does the average investor go today?
I had said, I gave a talk in Boston the other day, and I said to the people, it's mostly retirees. This is the hardest time that I can remember in the 30 years I've been in the business to know what to do with new money.
So stay on the sidelines with cash?
No. You've got to have a plan. You've got to get somebody to develop a plan with. And I would suspect, I mean, you know, I'm biased because we're an equity manager, but I think getting into good, high-quality equities is the best bet because, you know, with a generation now that was built on trying to figure out to have income, fixed income.
Is it time to get into those equities now, or is there still a
well, it's always time to get in. It's just how much you go in.
Right, so where are you seeing quality? If
Yeah.
you're looking mostly at small and mid cap, where do you see quality as far as sectors, if you don't want to name?
No. I mean, I like the growth. Okay, Maria's going to get so sick of hearing this. We are never, and I've told you this, we are never going to spend less money in our lifetime in cybersecurity. Never. It's never going back.
I agree. It's unlimited spend for companies.
We talked about this before.
Yeah, you're right.
We are never. So you find the names that are supportive, that are selling arms to that race, and you're going to do extremely well. And it's not extremely well between now and next Thursday or now and 4 months from now, but over the long term. The smaller and the mid-sized companies are also the most nimble. They're doing the best. And then eventually we think there'll be some consolidation be taken out. So there's I think that's a layup. I like regional banks, and we can get into reasons of that. So my point is there's always opportunities. You just got to do your work. And one of the problems that investors were doing, some of them retail and some institutional, were getting into sectors they didn't understand.
Right.
It's pretty easy to understand that we're in a war, a cyber war, and we're going to be spending money.
Yeah, no kidding.